What's up, everybody? Vincent Lee here with Track and Trade. I hope you are ready for another exciting video. I hope you guys. Okay. All right, so look, check this out. For this video, guys, we're going to be talking about the four basic order types. We're not going to go heavy into it. These trailing stop loss, anything like that. We're just going to talk about your buy. You have the buy market, sell market, um, you have limit order, and then you have, of course, you have your stop loss. So you have your buy market, sell market, limit order, and then your stop loss. So we're just gonna go through all four of those. Sorry about that, y'all. As y'all can see, I stumbled getting that out. But we're gonna go through them very quickly. How do you use them with actual intraday trading? That's what I focus here predominantly on this channel: intraday trading, day trading. So how do we use the different order types? How do you know what order type to use for if you're trading something versus you use a market order versus a limit order? How do you set a stop loss? Where do you set your stop loss? That's what this video is about. Real quick, guys, if you could do me a huge favor, guys, and please hit that like button, guys. Hit it one time, just one time, just hit that thing, okay? Hit that like button, guys. Please subscribe to the channel and hit the alert bell so that you can stay active whenever I drop a video. You can stay active with me. I can stay active with you. We can continue to love each other and be happy, okay? And also, guys, please leave me a comment on if you like the video and if it made sense, and if you want to see a different video in the future, guys. There's a couple of different resources you can utilize real quick. You can use our free Facebook group that we have below in the links below, guys. I also have a free Discord channel where I drop all types of alerts on what's going on with the market, what you should be looking at, what you should be trading, what you could do, and how to pretty much find a plan. And then also I'm always inside the Discord, so you can reach me there. And then lastly, guys, we have our course right now that's selling for 90% off, guys. You can get the course for $247, guys, and that's going to be that first link below to learn how to do all of this. I cover all of this in my course. And if you like me and you like how I trade, you like my style, please support, guys. I really appreciate that. Excuse me. And with that being said, we're going to go ahead and get into the different order types. So the first order type we're going to talk about is buying market. Buying market is pretty much where you are telling your broker that you want to get X amount of shares, whatever amount of shares that you specify, at whatever the market price is. So I do that very easily in this application by right-clicking. You can do that a couple ways. You can, of course, set up hotkeys. I think by hitting this. Actually, I think it's over. It's one of these setup, application settings, hotkeys. There you go. So you go over here, right here on the top. You should see at the top where you got your connected real-time data, the day, home screen messages. You should see a little support gear, and there you'll see. You click that, you'll see a little thing come down, as you can see, and then you're just going to hit application settings, and you'll see hotkeys. That's one way you can set different order types. You can also do it by buying, of course, inside of Active Trader. You see I have Active Trader open right now. They have buy market and sell market, so I can hit that. It'll come up. Or I can, of course, right click and hit buy. When I right click and hit buy, you'll see a little menu come up, guys. And we see a menu come up, you'll see it say buy at the market price, right? That's what a market order is. You're pretty much, the perks of a market order is you get filled very quickly. Because you are not trying to get filled at a specific price point, because you are trying to just get some shares, and you're telling the brokerage, look, I don't care how much the price is, just fill me in at whatever people are buying in at. You get shares very quickly. You can get inside of a position very quickly. What's the downside of a market order? You can get filled way higher or way lower than where you were anticipating getting filled. So you use market orders when, one, you see the spread between the bid and the ask. So that means the price difference between the bid and the ask is not that far away. So if it's like 2 cent, 3 cent away, 3 cent difference, that's not that bad. If you get filled at that 3 cent difference, you're not gonna take that big of an L. But if you see a 20-cent difference or like a 10-cent difference, that's dangerous during a market order, because there's chances that you're probably going to get filled at the higher price point than the cheaper price point. And as you guys know, we're making money. The cheaper we got something, the more it goes up, the more money we make. So if you want to have an entry point, of course you want to get in as close to that entry point as humanly possible. So for example, if I wanted to get in on this at the break above the middle VWAP, like I just seen, it broke above the middle VWAP and it's consolidating now around that. And I want to get in fresh into that break. While I look at the price point, I see to get in, that's about 176.85. So if I wanted to get in specifically at 176.85, I would have to do a limit order, guys. That means I'm telling the brokerage, look, I do not want this at any other price but this price, okay? But the price I specified. So that's what a limit order is. And you use a limit order when, exactly like I said, you want to get filled at a specific price point because you have a specific game plan that you want to take advantage of, and you cannot afford to get filled at a higher price point or lower if you're selling. So that's what a market order is. A market order is just you're telling the brokerage, hey, just fill me in, get me X amount of shares, or sell X amount of shares at whatever price, or buy me or get them at whatever price. I just want to either get some skin in the game, or I just want to get rid of it. And like I said, the quick pros and the cons is, pros, you get it quickly, you get filled a lot quicker. Con, you get filled at whatever the market price was. That is what you need to put into consideration. And like I said, to take advantage of using a market order, you want to use a market order only when you really see the difference from us. You see the spread not that big. And then two, when you see an opportunity that you just need to get skin into the game because you can see it's about to go up. You know it's going to go up. So you just send a market order because you want to get in really quickly to take advantage of that pull up, and then you want to sell off and then be done. Limit order specified, of course, so you only get filled at a specific price point, and you're only using a limit order when you can see that the price action, the spread might be too big, and there's a specific place you're trying to get filled, or a specific place that you're trying to sell off what you have. That's the limit order. What's next? A stop loss. A stop loss is the order type, guys, where basically you click and you can hit sell, and when you hit sell, you hit edit. You'll see this screen down here come up, guys, and as you see, I can change my order type over here where it says order by clicking and then just hit stop. As you see, you'll see stop come up, and you'll see it specify what type of stop do you want. Do you want a stop limit, or do you want a stop market? Now, a stop market order is exactly what it sounds like. It sells your shares. That's what a stop loss does. A stop loss automatically sells your shares at a price point. You get to choose if it sells it at a specific price point, which is a limit, a stop limit, or a market order. A market or stop, just a regular stop loss is it fills that price close to where you specified that. Not at, it won't fill it specifically. It will fill it as close to that specified price point as it can. Limit order, it will only fill it at that price point. Now, what is the downside to using a limit order with either a stop order, so a stop limit, or using just an actual limit order to buy something? If nobody sets that price, if nobody actually buys or sells at that price, you will not get filled. Let me say that again. If nobody buys or sells at that price, you are not going to get filled. What does that really mean? Well, if I'm trading if I'm trading Zoom and I want to get filled at $178, right? So I set a limit order at $178 specifically. But because of the price action and the volume and the volatility, it may skip $178 and go to $180. And if that happens because nobody actually ever bought at that price point, I will not get filled. I'll miss out on the opportunity. Same with a stop loss. Let's say if I want to sell off my position at the break below this SMA line, right? I can, this EMA line. I can set my limit order for, let's say, $176 even. If the price drops too low and the next price somebody is comfortable is buying at is $174 and not that 176, I will not get filled and my limit order will not go through. That is what you need to stay cautious of with your different order types, with the market order versus a limit order, and what the stop loss is, guys. I'm not going to talk about averaging up and averaging down, or trailing stop losses. One, I don't believe in trailing stop loss. I don't really believe in trailing stop losses. The only time I really think that you should use a trailing stop loss is if you're just trying to take full advantage of an opportunity and you're trying to manage your risk at the same time. So let's say you want to trade Zoom and you have good knowledge based off of wherever you've done that Zoom is going to hit highs of $300. It's an ascending pattern. It hasn't made any lows. It's making nothing but higher highs, but you still want to protect what money you're making. Well, then you have orders. You have order types like a trailing stop loss, which you see down here. If I go to order type, I can actually hit trail stop and trail stop limit, which works the same way. Trail stop sells it at a market order, but the price follows as it goes higher. So as you make more money, that trailing stop loss will continue to go up to protect some of that money that you lost, that you've gained. A trailing stop limit sells that trailing stop at a specific price point or specific percentage ratio. So you may set your trailing stop limit to always be 20% lower than what your actual market order is or what the actual price is. So you can set that trailing stop limit to always protect 20% of your money, and it'll continue to do that as you make more money. Those are some of the different order types, guys. Please, 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 if you plan on trading, practice on simulated trading, guys. I'm telling you, there's nothing worse than accidentally sending a market order when you meant to send a limit order, and there's nothing worse than not understanding how to actually trade limit orders. Practice trading pre-market or extended hours on simulated trading if you can. That's going to allow you to practice doing positions only on limit orders. Even if you don't get filled, you can see how it works, guys, how you have to set that limit order, see that price point actually match that and get filled and then move on. So practice, 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 guys. Those are your 4 different order types, man. I hope that this video was very helpful for you. If it was, please leave a comment, please like, please subscribe to the channel, guys. And I hope that you have a blessed day and you're staying positive. Take care, be safe. I love you, and peace. Okay, guys. Oh, yeah. Okay. Well, boy, you better stop. Yeah. Okay. All right, y'all. Peace. Take care.